Good morning on this lovely Tuesday, the 15th of July. And we know it's the 15th of July because
my password runs out today. It's the very last day that I cannot keep the password that they originally gave to me when they gave me the computer.
The original one. Just stick another, exclamation mark on it. I think I've got 6 of the same special character on mine at the moment.
Oh, so it ends in 5 exclamation marks?
No. Thought I'd put you off the trail just in case.
Yeah.
It's actually 5 hashtags.
And there it is. There is my passwords. What a beautiful morning.
Are we getting the weather report now? Is this it? I saw you you guys did this yesterday.
No, Angeline does that at 8:30.
Oh, right. So this is our view. There you go. It's a slightly overcast day in London.
I had an interesting ride in the tube. So I got on and it's empty on a Monday.
Yeah.
On a Tuesday, it's packed.
Fills up, right? Because Tuesday, Wednesday, Thursday. Twice.
Exactly. Yeah. Excuse me?
Tuesday, Wednesday, and Thursday. That's what they call it now.
And Saturday.
That's what they call it these days.
So anyway, I get on and there's one seat free, and the geezer's got his massive Osprey bag in it.
Oh, the big mountaineering ones.
One of the big mountaineering ones,
yeah.
and it's packed as well. Yeah. And he looks like he's gone to the office, but he's got a packed mountaineering bag. I'm like, all right, well,
he's probably a dad.
Yeah,
dads have big bags.
So I gave him a bit of a look, and his hands were shaking and everything. I thought, right, this bloke's not right. So I stood up, and then we got to Victoria, and he didn't move. The door's open. Everybody comes in. He realizes it's his stop, grabs the bag, jumps up and tries to get out, but the door's closed. So I'm sitting there. Go and sit in his seat. and he turns and he's like that.
Oh,
And so then he gets a handkerchief out.
Right.
And he wraps a handkerchief around the railing and then puts his hand in it.
Oh my God.
I'm like, man, if you're going camping, you've got other things.
Well, clearly not. If you can't figure out how a door works,
I
wouldn't run a risk with a tent peg or something.
But did he get off at the next stop and get on the tube going the other way to Victoria? No, he stayed on another 4 stops. I'm like,
well, maybe was he doing mental arithmetic? Could he change lines?
Yeah,
Victoria through, I don't know what we're talking about, Blackfriars or something at that point. Can you then?
I think he must have got the northern line up.
Yeah. So he's doing some kind of mental arithmetic. Right. What is coming up on today's show, people? So you've got the fortunate pleasure of myself through till 8:30 with a little bit of fast markets at 8:15. Then Angeline is in with Matt Armour.
Doing the weather.
Doing the weather at 8:30. Then she's also here doing the All Sessions opening bell, and then your bond expert is back in the building.
That's right, he's back, and it's interesting because one of the lead stories in the FT this morning is about catastrophe bonds.
I saw that. Yeah, I did see that. I didn't read it, but I did see it.
Yeah, it was interesting. It was just basically people taking more risk because the insurance companies have an increased concern about weather-related catastrophes. And then Dylan joins us from New York. Yes, he's across there in NYC.
New York. What time of the day is it over there? Oh, no, it's a replay. It's a rerun. We spoke to him yesterday. The thing's there. Sorry. I was like, New York, trying to do my own mental arithmetic so I don't jump off the wrong tube station. That would be good. That would be good.
Right, okay, let's go into overnight action and find out what Luke Moore did at the weekend. Have you been back
to my hairdresser? Clearly, look.
The one that watches the show?
Harps. Yeah, she's. I'm actually going to go see her on Saturday morning, so I need to get that fixed, don't I? Shocker.
Angelina's asking, why and how is your quiff so perfect?
Dyson.
Oh, you got the Dyson hair?
Got a Dyson hairdryer. Nice. Yeah, proper hairdryer. Actually, you can't go back. Can't go back to the other ones. Go to a nice hotel and they don't have one.
Yeah.
Game over. So, yeah.
The complaint said, good morning, Pelican. We got to shout it, don't we? Good morning.
Scottish man, Ange, producer Phil, and team.
Good to hear you. But Pelican did send us through a very good idea on email, so he's coming out with the suggestions. Thank you for that.
Lovely.
Good morning, Neil Brewster. Funky Gibbon in the house. Funky Gibbon, it's your turn to get chart of the day today. You got to steal that back from Hamish. Ida Rock's back.
What kind of streak is Hamish on these days? Last time I was in, I think it was 4 or 5.
He's not in a streak. Funky Gibbon took him out twice last week.
Right, gotcha.
But he has got yesterday's. Well, I won yesterday, technically.
I saw you won yesterday's, technically, yeah, but didn't want to shout. I had nothing kind of swimming around the kind of key rings and just didn't quite jump into automotives.
Terrible performance, isn't it?
Oh, awful, yeah. I mean, they all look pretty similar. They all look kind of down and to the right and plateauing, but yeah, they're all having a bit of a stinker. Not good, especially I saw, is it Loro Piana yesterday, which was one of the LVMH companies, being done for labour problems over in China. They've got a court order on them.
I would never have guessed that goes on.
No, when you're spending, £1,000 shoes, your margins aren't quite thick enough, so you have to put a little bit of child labour in there.
Speaking of China, we've had some numbers out this morning. So the GDP came in slightly higher than expected at 5.2 versus 5.1%. So that is the year-on-year growth rate for Q2. Retail sales not quite as good.
I've got a bit of a kind of screenshot if you want to flick across.
Oh, yeah.
A bit of a reformatted one. Can I put this on full screen? No, so you're going to see that is indeed a screenshot, and I've just put a highlight on it. There you go. So you've got GDP. The headline is that GDP masks potential underlying weakness. So they beat on the GDP. There was a miss on the retail sales. They came in 4% on a year-on-year basis, where the market was looking for 5.3, and then the industrials are a little bit mixed as well. So the industrial production was a beat, but fixed asset investment was a miss.
Looks like we've lost sound, have we?
Nope. So I think the implications for this, you saw a pop in the market initially, it was faded back in a bit, and I think the implication here for policy is going to be that we need more stimulus.
Shall we, just in case we don't have sound, so we go on to the front page of the Times so people can at least read the newspaper.
Do we have sound?
So...
Well, hang on, is there anyone in the chat saying? Okay, fine, we'll keep going. So, what is going on today
We've got Mansion House, don't we?
Mansion House this evening, yeah. Yeah, although there's apparently been a walk back on the cash ISAs, which is disappointing, I think.
Shall we just, let's go to a break. Let's go to a quick 1 minute break. Well, it's not, because we're clearly out of sync. So we'll go to a break, we'll reload, and then we shall come back to you in 1 minute.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, go. Hey guys, where are you going? You're not going to get better than cash returns.
Welcome back after our little blip. Everybody's reloaded. Welcome back to the stream. But we were talking about Mansion House. We were talking about Rachel Reeves this evening. She's presenting to the financial services sector.
And we're already starting to get stuff through. So the FCA has announced this morning that it is cutting red tape, especially for companies that are trying to raise funds. It was a 20% limit. Jet2 Holidays, nice advert there for them. Where are we? It's on the next one. Yeah, there we go. So under the current regime, listed companies are required to publish these detailed documents for any capital raising of at least 20%. That is going to change in January, and the threshold will be lifted to 75%, which is a bold shift, says the FCA, and it estimates that save businesses 40 million a year in regulatory costs. 40 million?
I'm going to say that is not a bold shift. 40 million quid. I mean, I get it. Okay, raise the threshold, therefore people have to do less paperwork.
I guess they don't want to steal stuff from her speech, right? So there will be more coming out tonight, but that's a little tease of what's to come.
I did see as well a comment just before I ran into the studio that the Bank of England was looking to delay its reforms on some of its banking capital requirements. I think there was speculation that they were going to bring it forward to be a little bit more in line with the US. That's going to be delayed now until 2027. So that kind of flies in the face of this cutting red tape, cutting regulation. They were going to reform how much capital banks needed to hold on file, and then now delaying that another year or so. We'll have to keep an eye on the banks this morning, just in case they were moving on the way into that. Yeah, we just briefly mentioned it. I mean, the other thing that we're expecting that we're probably not going to get in her speech this evening is a U-turn on the cash ISAs. So our cash returns campaign goes on. Yeah. Because apparently the National Building Society lobby was really strong, saying that, if you're going to pull all these money out of cash ISAs and push them into the market, what are we going to use to lend out to you to give you mortgages at record rates? Can't do that, possibly. So that's a shame. We'll have to see what she says, but I think that is disappointing.
Yeah. But lots of pro-growth announcements hitting the tape tonight. Do we know what time she's on? Did you get the invite?
No, I didn't get the invite, but I also don't know what time it starts. If it's a dinner, I'll speculate it's like a 6:30 arrival for a 7 o'clock start. All dinners are. And then, do you reckon she speaks before or after dinner? After a glass of wine or before?
Mansion House. I don't know what the protocol is for Mansion House speech, actually.
No, I couldn't find a timing anywhere. Yeah. Just that it was tomorrow. So we'll have to see how that goes. Something else to speak about this morning that was released in the small hours of this morning. UK retail sales, but not the official figures. Retail sales comes from the British Retail Consortium. So almost like a private reading. Do you know how like the ADP is a private reading to the non-farm payrolls? So they've come out and they've said that sales in June are up 3.1% year on year. Guys, can we chuck my screen up? Here we go. So they've said that the hot weather in June has lifted UK spending, specifically as fans buy sports gear and entertainment. And so they've called out here the official figures showed retail sales in May dropping by 2.7%. But the private figures are showing that it's going to heat back up again. The total value of food sales rose by 4.1% year on year. We've got food sales they're calling out. They're calling out ticket sales. They've specifically called out gigs from Beyonce and Pitbull, huge outdoor concerts in Hyde Park, a 0.8% increase in non-essential spending.
And Oasis.
Oasis only started in July. So it wouldn't have helped June necessarily, but I imagine hotel bookings if they're booking them forward. We'll keep an eye on that and see if that actually does feed into the official figures when they get released.
Good stuff, right? So Monkey Man is pointing out, has Rich been looking at holidays if Jet 2 is his advert? Well, we got another one for you here, Monkey Man, you'll enjoy. There we go.
Ta-da.
Marks & Spencer's launching its first overseas fashion deal in Australia. That's right, David Jones department store. They're doing a deal where initially 24 department stores will hold Marks & Spencer's clothing. So this is good. This is their way to run a capital light model abroad. So that international division, the CEO thinks has got a lot of growth potential without the mess that they've made before of international in opening the stores everywhere.
Excellent. Should we talk about the biggest story overnight? The one that we haven't spoken about yet? NVIDIA? Did you see the NVIDIA story? NVIDIA. So we saw...
all-time highs, great.
Yeah. What was that the Beachy told you yesterday? All-time highs beget all-time highs. Momentum begets momentum. So Jensen Huang was in the White House last week. He's then jumped on a flight and he's gone to China. And he comes bearing good news that supposedly the H20 chips that were subject to the export controls is now not going to be subject to export controls. They are going to be getting lifted, and they've also got a new chip that they've developed and that's going to be specific for the Chinese market. So they had taken a $4.5 billion write-down, which now in theory could get reversed back. But very good news for NVIDIA, popped overnight, and it brought the NASDAQ futures screaming back to an all-time high.
Was it the 4.5 billion write down solely on this?
No, I think it's going to be in terms of their totality of export controls. But this H20 chip is like the vast majority of all of that.
I wonder if they've done anything with the chips.
They've probably just kept them on ice, haven't they? It's again, you'd argue this is another taco from Trump. It was only April that these export controls got put on, and now 3-4 months later, they're being walked back again.
There are still regulations to come on though, because he said that, hasn't he? Pharmaceuticals and chips are still to come. Section 232.
So was he? Is he changing his mind on one to look after his buddy, and then going to screw everybody else?
Yeah, sure that's
well.
Not been happening.
It popped overnight, pushed all the futures up. We're blue across the board now as a result. No doubt we're going to have another strong day in the tech space. I'd probably be watching people like ASML and the kind of the European names, because you might get an early read on them from 8 o'clock on the European listings, and then how that feeds across into one of the other listings.
Well, this is solely NVIDIA, right?
Solely NVIDIA.
No.
Yeah.
So why would there be read through?
There would always be a read.
Just because the sector.
Because of the sector, yeah. Yeah.
So it only affects one company, but people just take the whole industry up.
I don't think NVIDIA is just one company. It is obviously just one company, but it is.
So one company is having a benefit from this.
Yeah.
But you think?
I think we'll get
every stock's going to get lifted.
Yeah, correct. Well, you look at
that's the kind of market we're in.
It's the kind of market that we're in. I mean, you look at indices across the board now. We're green, having been down yesterday. We were down at the start yesterday. Obviously, the dip got bought yesterday afternoon. We're now blue.
So Marks and Spencer's putting lingerie into Australia. That'll take next up as well. That's a big benefit for Currys.
Well, I'd actually say
it's the same thing.
Well, yeah, it's the same thing, but I would argue the retail sales will actually affect those more so than the overnight news and Marks and Spencer's, I would say.
Yeah. Right.
Do you not understand that you get sector read across? No.
Not when it's completely irrelevant to every other company in the world apart from that one company.
But I would watch the sector. Well, you watch the sector, but you might get some weakness in certain names. In which case, if an ASML or if a B semiconductor or if a
what would be interesting if NVIDIA opens up and doesn't kick on? That'll be the interesting one.
Well, overnight markets, the old blue sky markets have got them up over 171 just now. Traded closed at 163.
So 5%.
5% up. Yeah.
So what's that? 200 billion. Adding on 200 billion for a 4.5 billion write-off makes sense.
That kind of market.
Yeah. Right, let's have a look at the futures. So we're sticking on $200 billion for writing back 4.5 billion onto a bottom line. Mm-hmm. What else are we doing with the NASDAQ? Well, it's up 45 basis points, so 22,950. And we've got the S&P 6285. But
let's cheer you up.
That,
come on, look at the FTSE, that will cheer you up.
FTSE over 9,000 for the first time. If it closes over that level, there we go. New all-time highs yet again for the FTSE. DAX 24,200. That's not an all-time high, is it?
No, it's not. No, it's not. Shout out to the dollar as well, making a bit of a comeback. Cable's come from 136 down to 134, and that's happened over the last 4 days, 3 or 4 days. So we're finally starting to get a little bit of that strength coming back into the dollar.
But what's run into resistance? Well, it is Bitcoin. 123 yesterday, back down to 117,000 offered at the moment. So some assets are finding tops out there, as the pound has as well, as you said. And then, copper, $5.57.
What's happening to oil? Where are we on oil? 65.60, down a little bit.
That's sort of dropped off as well, actually, with a bit of dollar strength.
Yeah, has a little bit. I mean, there were stories as well overnight that Trump has given Russia 50 days to stop the war. Otherwise, they're going to be getting 100% tariffs on any of their secondary oil exports, which I was trying to figure out how that would work, because the US doesn't buy any oil from Russia. So if you're going to double the tariff on oil being sent to Russia, it's like saying that Marks and Spencer's is upset with I don't know, Next, so therefore Marks and Spencer's is going to put its own prices up. They don't buy anything from Next.
Yeah.
Doesn't make any sense. But supposedly it's a 50-day countdown. But you get headlines on
sending
Putin
weapons
and you get,
to Kiev as well.
Yeah, yeah. There was also a. I mean, we're jumping around just a little bit here, but stories that the Euro or the EU is allowing in its new budget, which we're going to get today, I believe, budget estimates for the next couple of years, they're going to allow the Eastern Bloc, the Eastern kind of countries on that side, to freely make their own decisions to decide whether we're going to pull some money out of something to put into defence. So they're giving local nations a bit more flexibility on how they can control their own domestic budgets in lieu of spending on defence, it seems.
Yeah. Right, what Rachel Reeves didn't want to wake up to this morning, a begging bowl from Thames Water. Thames Water says temporary nationalisation may be needed if creditor talks fail. So,
Something like the debt now that company has is just obscene. I think I saw the headline. Yeah, their net debt has gone up 10% in a year. Their net debt. So
it's like America.
Well, yeah.
It's the same.
16.8 billion in net debt for Thames Water. That is wild. That is a ridiculous amount of debt.
Maybe the FCA changes will help them.
Yeah, maybe.
40 million saving.
Yeah, exactly. Yeah, that's it. Yeah, yeah.
Right, we did have numbers from Barrett Redrow. So we've got Numis Securities' take on that is the trading update. Adjusted PBT is expected to be in line with consensus expectations. That's 583. This has happened despite completions being slightly lower than anticipated at 16,565, about 350 houses less than expected, and that's down 8% year on year.
They've specifically called out planning regulations on that as well. So the company themselves have said recent planning reforms are taking time to be fully embedded at a local planning authority level, and the continuing adverse planning decisions and delays mean that we're now anticipating less numbers. They're going to be broadly flat next year. But they do call out the fact they believe there's a long-term structural undersupply of housing in the country. So they're being a little bit tepid about future expectations.
So Numis saying that it's a 4 to 5% shortfall, suggesting downside risks to forecasts. But shares are down 12% since the end of June and trade on 0.94 price to NTA for June 25.
Interesting. In other retailers, given we were talking about the retailers, B&M Euro, not a shop that I think I go to that often, but a popular shop nonetheless. Their revenues are up 4.5% on a like-for-like basis, and their sales are up 1.3%, driven by a good performance, specifically in April. So good for B&M. What else do we have? NatWest, just a bit of a story on the banking sector. They've successfully disposed of their shares in Permanent TSB. I didn't even know they had a holding in Permanent TSB. And what Permanent TSB is? Isn't that what was spun out of Lloyd's? Look, because it used to be Lloyd's TSB, didn't it?
Yeah, well, that's definitely TSB, but I'm not sure what the
Permanent TSB.
Yeah.
I think they've raised a couple of million, like a couple of $100 million. I don't think it's a huge.
Okay.
I don't think it's a huge thing.
Friar Tuck helping us out there, saying that countries that buy Russian oil after the 50 days will have 100% tariffs applied on their country's products.
Got you. Fine. Okay, so it's like a second layer of. It's not a direct tariff. It's a. So the guys there, you're probably looking at like the Indias. Clearly China. That's what that's going to be.
Yeah, but it doesn't matter. Tackle. It's not going to happen anyway. Just
All-time
a made-up
highs.
number.
All-time highs.
Right, before we go to the chart of the day, then if you hit that like button, that would be wonderful for us, please. That would be very much appreciated. And if you aren't subscribing, like 53% of you don't, please hit that subscribe number, because we're at 1,250 and we're trying to keep above Bitcoin.
I heard that. Yeah. Yeah, good for you. So that Bitcoin's selling off, it's giving you a little bit of space.
Yeah, don't unsubscribe. Right, what country then? Hamish, are you ready? Actually, Hamish, no, you go and make a cup of tea.
Give everyone else a chance.
Yeah. And yeah, what country are we looking at today for the chart of the day?
Another European stock. Okay.
You ready?
Yep, let's have a look. Go.
Welcome back, welcome back. So we got some price indications. We got Barrett Redrow down 2%, B&M Europe down 2%, NVIDIA probably up 25, and NatWest trading at market. And yeah, that's about us.
We've got some upgrades and downgrades here as well. We've got Fresnillo has been raised at JP Morgan, but then cut at Morgan Stanley.
Oh, really? JP Morgan against Morgan Stanley.
JP Morgan against Morgan Stanley, yeah. So JP Morgan is saying it's gone from 1450 to 1850, and Fresnillo have been cut to 920 at Morgan Stanley. That's an aggressive. I wonder whether that's actually a typo on the email I've got. I'll have to double check that.
Interesting. Right, looking at the chart then before the London Stock Exchange is open, it is ThyssenKrupp. Well, we didn't get it here. Parquet 1977. I expected that Jugger would have a better chance of this one, being a German company, of course. But yes, ThyssenKrupp, good friend of mine married into the family.
Oh, really?
Married Cynthia Thyssen.
I bet it must have been a
big shout out to Ollie Kadim.
Must have been a bloody good wedding.
It was one of the best weddings I've ever been to.
Missed the opening bell.
You haven't missed it yet. Nobody knows.
Oh.
Ring it.
Come on, okay, ring it.
The London Stock Exchange will not open if you don't ring that bell.
Ring the bell.
Right. Okay. So we are. They're on a delay anyway.
They're not open yet.
They're just getting going. Persimmon down 3.7%. Smith & Nephew down 2%. Vistry, so the home builders giving up. At last, British American Tobacco goes down 60 basis points. That has been a shocking trade from last week.
Just going to call this out. This may well be early auction jitters, but Barrett Redrow are being called down 14%.
Should we buy some? I'll buy some now.
356, it's indicating. So that is going to be a delayed open.
I'll buy them down 13.
Yeah. Okay. Yeah, 356.
It seems a bit much from what? Downside risk, 5%.
They missed 300 odd homes. They've called out that planning isn't happening as quickly as they wanted it to.
Yeah.
And they think next year is going to be flat.
If somebody wants to put an auction trade in, what do they have to do, Luke?
Call the dealing team now. So you can give us a ring and you can give us an order to say, I want to buy X at Y. Give us a limit.
Yeah, definitely use a limit. Do not go in at market.
And then depending on where the stock uncrosses, so for example, now it's indicating that it's going to uncross at 356.5. If you were saying, I'm happy to pay 13% down, call that 360.
Yeah,
let's just say.
360, yeah.
You bid 360 for X amount of shares, we'll then book it to your account as a spread bet.
Pete Ward on this morning?
His team are, if you want to call him, yeah. To call them out. So we've had some news also this morning that we didn't cover on Experian, and they're at the top of the pops this morning on the FTSE 100. They are up 5%. They've said that their outlook is unchanged, but their organic revenue is 8% higher at beating estimates. So good for them. What's that? We've got NatWest up there as well, up 0.5% after realising some of these profits, one would imagine, on the permanent TSB sale.
WPP, has it found a low there with its new CEO starting in September? That is trading 422, up 1.8%. Do we have any belief? WPP, very well qualified.
Yeah, I mean, they've moved into that nice new, into the old FT building across the road.
Oh, have they?
Yeah, I walk past it every day. WPP written everywhere. Lovely looking building. So maybe they have. Yeah, maybe they have.
Or maybe they shouldn't be spending all that money on a new building.
Our budgets work.
Rio Tinto, 44.40. And then Barclays, 345. Well done to all of you that still hold Barclays all the way up. Legal in general, I considered letting mine go in my ISA yesterday, but it would just be going into cash. So there would be no point in that. But it's at those, I'm sure you guys are the same. Your pension's probably looking healthy. Mine's at new all-time highs, and it's tempting just to
do something.
De-risk.
It is tempting to do something.
Maybe go into gilts. Is that still de-risking? Not sure.
Yeah, very good. Let's check in on Fresnillo after that kind of tug and war upgrade downgrade. They're down 1.2%, 15.18. at the moment. So they are looking weak in a strong market, not good for them. What else have we seen? We had some news from Close Brothers. Close Brothers, of course, have been tied up with everything going on with the motor finance scandal, and it seems that they're starting to strip out some assets.
Right.
One would expect because they've got a bill to pay, perhaps. They've sold Brewery Rentals Limited. No terms have been disclosed, but they're up 1%.
Right, so there is the chart of Barrett's. We're waiting that. Where's that uncrossing now, Luke?
365 indicating now.
Okay. Yeah, I think it's still too low, isn't it? But
So 365, where does that break? That's below that low, isn't it?
that would be.
Yeah, it would be.
Yeah, 386.
There's got to be.
How many shares are they uncrossing then?
Indicating 381,500.
It's not much, is it? Times £4, 12 bucks.
Yeah, not much.
So there is a low on the chart going back to October 23 at 380. But to get, it's COVID, is it? Or is that, oh, no, 22, late 22 is down at £3.40.
It's aggressive.
£3.18. Right, quick look in Europe before, actually they're probably about to open, are they?
I've got it on my screen.
Right.
I've got it.
You keep an eye on that. Let's go over to Europe. Let's see what is happening. We've got on the downside L'Oreal. They're not worth it this morning, 369. Nestle down 60 basis points. Rheinmetall just giving up a little bit of its gains from yesterday. There is, Luke called it, ASML up 2%. Should we have bought that one at 650?
Well, I mean, who knows that sector read acrosses occur. Shocked. I'm completely shocked. Barrett is open 10.3% down, 367 it opened at, and is quickly bouncing, now trading 372 offered. It's all over the place.
I would hazard a guess that somebody was potentially stopped out on that open. What do you think?
Well, it did. Yeah, it's swiftly now done 634,000 shares, so it's a very swift volume that's coming through. If you get stopped out, just as a kind of point of, the stop has to trigger first, right? So
I'm not sorry. I'm talking more about a hedge fund manager.
Oh right, okay, fine. Sorry. Yeah.
One of the.
What I was going to say for a stop to be triggered, the market has to cross through your stop level, and then it becomes a market order. So the move then means the follow through is a market order. That's why if you see a move like that, you typically see more of a flush as soon as it opens.
Yeah.
As these market orders then rush in, because your order doesn't know that it needs to sell stock until it crosses through.
So it has to print.
It has to trade. You've got a stop level here.
Yeah.
It has to trade from here to here for this to then sell.
Yeah.
That's why slippage exists.
Kind of instant or.
Yeah, as quickly as it can be. Yeah, depending on size of the order, everything like that. It'll just get pushed into the market. But now trading lower, 368.
Right, looking at the read-throughs then. So we know Persimmon's down.
Oh, interesting.
Else?
B&M are down 8%. I've just seen.
Oh wow!
Even though we saw that figure and we thought that they'd be quite good, B&M are they on your list there? No, they're not.
Andrew McKelvey asking exactly that.
9.2%, 231 trading. So let me see if I can dig into those numbers just a little bit more for you.
Right, so Berkeley Group down 2.5 on this. Persimmon down 4.3.
That's going to be. I think that's going to be this comment on planning taking longer, because if Barrett are calling out that is the reason why these numbers are not looking great.
Yeah.
That's a time when actually sector read across makes a lot more impact.
Is valid,
yeah. Correct.
Bellway down 2.6 on it as well. So what are the miners doing today? You heard it here first. Our mining expert, John Mayer, saying he thinks, from his knowledge in the copper sector, from talking to managements and knowing what they need for future growth, he thinks BHP come back in for Anglo-American at some point. He also thinks there's an outside chance that Glencore could then join in as well and also go for Anglos. So I guess there's a bit house tidying what's housekeeping
Housekeeping.
to do for Anglos first. It's gone through a lot of change, but once it is cleaned up, then do we see the stock back trading up at 30, possibly? With I think that's one that I've sold Glencore and bought some Anglos on that yesterday.
Okay.
Because Glencore's done its thing, right? It's £2.60, great, fantastic. £3.15?
Probably not. Interesting. Okay, just a bit more on this.
Fair value.
Back to fair values. Just a bit more on this B&M. I've got this up on my screen here. I'm not seeing the bad news in here to take the stock down now 12.5%. So they reported Tuesday like-for-like revenue, as we mentioned before the start of the market, buoyed by warmer weather and Easter-related demand. Favourable weather demand boosted garden and outdoor products. God, it'd be nice to have a garden, wouldn't it? With my little balcony in my flat. Like-for-like sales rose 1.3% during the quarter. I'm not seeing the bad news in here. Yet it's getting killed.
Should we go into the actual statement?
Yeah, if you got it there, I can have a look. No, I've got it here.
Yeah, sometimes they don't quite pick up the. Was it scheduled?
Yes. Yeah, if you could click on that, mine's not quite playing ball with the Wi-Fi in the studio.
Okay, yeah, there's mine. So my early days spent listening to and learning from our passionate colleagues and customers have underlined for me the strength, which is more crucial than ever. I see significant opportunities. Looking ahead, my focus on building on our strong foundations, leveraging our market position, and continue to deliver exceptional value.
Yeah, I mean that's. There's definitely got to be something in here around cost, potentially around inflation. Is there going to be something in here where their supply chain could get tariffed to high heavens? I'm not sure.
So group revenues increased 4.4 with growth from new space.
Heron Foods must be a subsid.
1.3.
Dry weather, Easter timing, beauty and cleaning products has been comparatively stronger in June.
FMCG negative, but this is
fine.
Well, it certainly reads fine. If they have been there we go. ASP deflation has led to a lower trading gross margin year on year in some gen merch categories, but we'll begin to annualize these effects and new ranges introduced have brought in higher trading gross margin.
Yeah, so they're offsetting tariffs, which is arguably what this is, the cost of their goods going higher, by bringing in better margin products. That's sensible business.
Is there a concern, the fact that they haven't given any full year guidance, but it's only a trading update, so...
If you know on the chat, if there's anything, if you're a specialist in the UK retail sector, I'd be very keen to learn what's going on there. Andrew McKelvey, if you can find anything, it'd be great to know. Or Rio's, while you were talking about Rio's, they've named a new boss to their iron ore division, Simon Trott, who I don't know where he's come from, but that came out at 7:30. Just to give you that story there. Barrett Redrow now steadying off around the kind of 368 level, just to kind of give an update on the other big movers of the day.
It's the second big drop for B&M from £3.40. God, that reminds me of Greg's going in Andrew McKelvey saying the shares now look like one of their offerings on the shelf.
One of the bargain bins. Very good indeed. Yeah, well, as I said, we haven't been able to see anything in there that looks particularly weak. What else is going on?
That is painful.
Experian, we didn't call out Experian. They've had some news this morning. They're now at the top of the FTSE, up 3.5% for better news. Just to call out what they've done. Oh yeah, we did call it out. Yeah, the outlook was unchanged and their organic revenue was up 8%, beating estimates.
Rightio, we are 8:13. Remember to take out your umbrella today. If you're out for the day, there is some clouds on the way, not just for some of the stocks that we've covered this morning. But yeah, apparently rain is forecast. So if you're running out the door in the next 10, 15 minutes, don't forget your umbrella.
Good, because I definitely did not bring an umbrella with me to the office today. Fantastic.
Steal one of the IIG ones.
Yeah.
So yeah, with B&M looking down now 14% at 221.5. Oh my God.
Oh,
God,
got water all over the
again.
place.
Look at that. I was so excited. Funky Gibbon tell me Smart Web was down 8%. Funky Gibbon, you've just sent water all over the wires.
Oh,
down
no.
there. Oh,
Right,
oh.
right.
Hang on, let's just cover SWC first. So, wow, £3.20. That's 305 to 320. That's one that I'm going to be watching today. I did let mine go, but that's starting to get interesting. I would think I would be at £3 for a bit of a slug of those. The last fundraise, remember the last fundraise? That was done at £2.90. So with the added purchases, with the ATM that he's done, you know, do you see those move up? Let's see what Metaplanet did overnight. Get a steer on there. But the stock went down yesterday. There's clearly a big seller in there. There we go. Metaplanet down 7.8% overnight. That's what's given you the lead into SWC being down. Right, I've got some mopping up to do. We'll see you in a couple of minutes.
Funky Gibbon, we didn't expect it either. Bye.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Welcome back to Fast Markets. It may well start raining outside today, but we've cleaned up the rain that we had.
I told you to put your umbrella up, didn't I?
You did, yeah. So that's
everywhere.
We've mopped up. We are now clean and we are dry again.
All right, so Fast Markets, we are swimming through things this morning. A quick take a look at commodities. We haven't done that yet. So oil down 1%, $65.50. We got gold 3360 going up as Bitcoin drops. And then, yeah, we said copper 557. So I am going to jump onto my tasty platform. And for Fast Markets today, we're going to go through some of these names because I did add Marvell that Pierce spoke about.
Interesting.
So talking about stocks in the sector going higher, we certainly hope this one is. So in Marvell, I have sold a 55 put to buy an 80 to 115 call ratio.
And they're currently 72, closed at 72.60 yesterday.
72, so I need a nice 10% gap up in that. But that is for September expiry. Then, of course, we got the good old Intel. Intel, same kind of strategy. Short the 19 puts. So I would be forced to buy them at 19. But we are long right here and now at 23 bucks. It's not a huge position. I've only got 500 shares worth.
Okay.
But we own those all the way up to 34. $34. Google, I went long of for the first time. So that is same structure again, selling a 145 put to buy the 185, 215 call ratio. That's for September expiry.
I've just put these in my ISA actually.
Nice.
I think I paid 182. I think I bought them a couple of weeks ago. I like the catalysts I think that they've got.
Yeah.
I think if you think about the whole reason why they changed from being Google search to Alphabet, the whole point was they can have lots of different projects underneath these different kind of business divisions. And I saw someone describe it as the AI ETF, effectively, because they've got so many different businesses.
Wow.
Gemini, they've got Waymo, they've got, I saw they were doing something with vaccines and data testing. They've got so many little things in this pipeline that if the market starts to look outside of purely the search business, they could potentially be one that's underperformed because the market is thinks that their search engine is at risk, which of course, through Perplexity, through ChatGPT, through all these other things, potentially it is. But if they can get it right, I think there's some catalyst there. So I like it as well.
And you would have to back their capability for getting it right. They are.
Sundar's got kind of track record of continuing to push the envelope. I mean, even you think about film production, right? Is it their model VO3 about how they produce video content off of a prompt? I mean, it's clearly been used for memes first and foremost, but my news feed is just full of AI generated memes, and it's all using that VO3 engine, and it's getting better and better and better because, of course, it's been trained on YouTube.
Right.
So, if you think who's going to win in that, who's going to get a contract from the first Hollywood studio to say we're going to create the first kind of AI Hollywood movie, I would bet it's going to be Google. So no, I like that play.
Yeah.
I like that play a lot.
Just when you mentioned Waymo there, we have got a long article in the Financial Times this morning about BYD, how BYD caught up with Tesla in the global EV race. Yes, they are exporting now, so sales taken off around the world, and that is a really nice long article. But there it is, BYD taking over Tesla this year for the first time. So
You're starting to see them. Are you starting to see them around as well?
No, I don't.
I'm starting to see them knocking around.
Right.
Somewhere in the city, just knocking around. You're starting to see them.
I'm too busy on my phone trading. I don't really notice.
Hopefully not when you're walking around, because that'll be.
Yeah.
No, you can't be doing that.
Especially in my area.
Exactly, you can't be doing that. But no, you're starting to see them around, so I am not surprised by this. Is this an anti-Tesla story, or is this an increase in BYD story?
It's the Financial Times literally say it's because Musk took his eye off the ball.
And supposedly now with his America party, it's not like that's going to change anytime soon, is it?
Yeah.
Although I just kind of on the subject of Tesla.
Boise said exactly the same as you.
Yeah, I'm starting to see a lot more by Boise. On the subject of Tesla, there's I read that there's supposedly going to be a vote, I believe, autumn time, I think it's not confirmed, where Tesla is going to invest into XAI, which will then start to bring kind of grok into the car to try and help with the full self-driving. So you're starting to see a little bit of Musk's companies, do a little bit of business with each other.
Right back up to the Tasty platform then, you will see why I'm so disgusted by this NVIDIA move today, because I am short the 170 calls both in August and October. So we're going to get blown through there today. But I have actually had that, the October one on, I've had that position on for probably about 4 months, something like that, because it's a 125, 170
spread.
Short
strangle.
Yeah. So that one's actually, that one's all right. And then I am short one of the 177 calls as well, but that's down to 40 cents, so I can probably
get rid of that.
Get away with that one.
Yeah.
That's going to hurt today. And then Palantir as well. Palantir is short the 160 calls, currently trading 149, and short the 180 as well. So I am very much to the short side of these tech names, from about 4% higher than here. So that
was intentionally designed to be above the all-time high on the Nasdaq to try and kind of help everything going in.
And that I don't believe that you can get the market caps to the valuation on Palantir, but the market cap on NVIDIA, because then you're talking 4.3 trillion, something like that.
Something like that. Yeah. I believe in momentum.
Miracles.
What?
Miracles.
Miracle. I believe. No, that's the wrong song, isn't it? I'm as I said on the show last week, I'm a little bit Pavlovian with these things. When the momentum and the wind are behind the sales of these stocks, it's very tricky to get in front of them. And if you're going to try and sell down, as in to try and take a directional short bet, I think it's always better to try and kick them on the way down. Try and watch them break down below structures.
That's why I like shorting the calls with September expiry, though. Because at some point between now and September, I have a very strong conviction that NVIDIA is below 170, right, last one is Tesla. Tesla, we have 2 lottery tickets. So that is long, a 380 call, short 2 of the 440 calls for September. But this is the big one. Next June, I am short 3 of the 100 puts. So I do not think it goes down to 100. You might not think that that's such a crazy assumption. But then long 500 to 800 call spread. Now, this cost me, let me see, so 23 minus 14 minus 6. This cost me $3 for $300 of upside. So it is a 100 to 1 payoff for Tesla to go to 800. That's why I call it a lottery ticket.
That's definitely a lottery ticket. One thing I'm just going to call out whilst we were looking at those, Oracle have said that they're going to invest $2 billion in AI and cloud infrastructure in Germany. So that's just come out a couple of minutes ago. And I'm just trying to see what it's moved. So the ASMLs of this world are still benefiting, I'd argue, from the from last night's news on NVIDIA. If you're looking at AI and infrastructure in Germany, what should we look at?
Vodafone.
Could look at Vodafone. What about probably more like an SAP or a Siemens Electronic? Yeah.
I'm trying to remember Northern Data.
Data.
This was a really interesting one. A lot of people called this one to be not believe in the CEO and his ethics.
Okay.
And you can see in 2021 they went all the way up to 120, came back. But if we look, these now have a load of NVIDIA chips, and they're a Bitcoin miner, but they also have NVIDIA chips. And the end of last year, look, they got all the way up to 50 and then have come back. But I'm not by, this one is, there was a lot of questions on the validity of one of the short sellers said, we don't think that their NVIDIA chips even exist.
Oh, really?
Yeah.
Oh, right. Okay. Fine. So not a trustworthy guy. Well, I mean, they're unchanged, right? So they're clearly not going to be benefiting, or you'd argue the market's not going to assign any benefit to them. What about Siemens? Siemens in Germany. I've not got data feeds on that. Can you have a little look at them on yours?
Yeah. Siemens up 93 basis points.
Okay. So nothing really going on there. Schneider Electric. Let's have a look at those. Scroll back to the right.
Schneider.
Up 0.6. Okay, so this 2 billion euros being invested by Oracle, not really moving anything I would have expected it to.
What is it, in 2030 or something?
No, just the headline. So Oracle to invest 2 billion in AI and cloud infrastructure in Germany. That's what I've seen.
Right, Barrett's is finding a base. Look at that, 375. You could have got them at 368. And then our B&M was, how's our...
BME.L. They are 12% down, 225. So you asked me a question in the break. What would you buy, Barrett's or B&M? And I said probably B&M, because I think if the point around the Barrett story is this issues with planning and not being able to build the houses that they want to.
Yeah.
Does that then, when you get Persimmon when they come out, when you get Barrett's when they, no, hang on a second. Give me some more home builders. Why am I mind gone blank? Persimmon, Vistry. When these guys all report, do they say something similar? In which case you get knocked again and again and again.
Yeah, that's a good point.
Whereas B&M Retail, we're arguing that, you know, if the Nexts of this world, which are down 1/3%, potentially Frasers, if you're looking at this kind of retail space, they're up 0.2. You know, BME, that looks specific to the company. We've already said that they're trying to diversify away from those lower margins products into higher margin stock. So
yeah,
I'd probably look at BME.
A last quick look at our queen of the tape, R6 Senna, asking SAP. SAP up 17 basis points on the day there.
Yeah, not picking up any of this benefit of this supposed infrastructure investment.
Huge positive for Vodafone.
What's Vodafone doing? Vodafone is...
Oh, I sold some puts in Vodafone yesterday. 76 pence
down
for December.
Down 1/3.
So December 76 puts, I sold them at 3.5 pennies yesterday. So, you know, your net buy price would be 72.5, or you get the 3.5 pence.
Crickets.
Talking about the cricket.
Crickets.
Good win yesterday.
Oh, great win. I was trying to explain to my wife, you know, how did you see how the last chap got out?
Oh, it was poor, wasn't it?
Oh, it was awful. So it was a spin bowl. I mean, my cricket knowledge isn't what it needs to be, but the guy's defended it, and the ball has bounced back off of his defence shot, and because the spin was so high, it's just rolled like incredibly slowly and just knocked the stumps off.
And that was that.
It was yeah. You just saw everyone kind of go, because he's defended it, and then because it knocked the stumps off. It's gonna be one of those great photos where all of the England players like run off, and the Indian guys just collapse into the floor. Great. Good advert for Test cricket.
Right, do we have Matt Arbour in the wings? He's ready. Here he goes. After Angeline calling him a Muppet yesterday, what are we going to see today? You haven't been Muppetized yet.
No, I haven't. I did see that.
Very good.
Yeah, right.
Like that a lot.
I need to update my LinkedIn profile picture with something.
Good stuff. Right. Yeah, we've got Matt Arbour coming up, and then Reza. So get your bond questions in. Any questions about bond market, about catastrophe bonds, or about UK corporate bonds, then send them in and we'll get those to Reza in half an hour. See you shortly. There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hey, trader friends, welcome back, and we are live at Traders with Safe Harbor.
Morning, Ange. How are you?
I'm very good indeed. How's your bum? Is it wet? I'm asking because Funky Gibbon mentioned earlier that Smarter Web was moving rapidly, and Rich got so excited that he knocked over his glass of water. And as a result, the table, Funky Gibbon, is slightly wet. My makeup bag, which is actually thankfully escapes, it's got a slight soggy bottom here. That's why I was asking you.
Soggy bottoms, soggy bottoms. No. The chair. He's cleaned the chair off. It's only got the usual stains on, so we're all right.
Speaking of usual stains, markets, we're all kind of counting down.
The bell surely was rung this morning. 9,000 on the FTSE. Good Lord.
No, good Lord
It didn't close at 9,000 last night. I was a little surprised at what's wrong with traders today. They could have printed 9,000, made the NFT, sold it to some crypto genius.
Yeah. But maybe everyone's too busy drinking in their gardens whilst we still have the good weather.
Possibly.
But it's quite incredible, this move. It's come back off now, just slightly. Do you think we'll close above it today?
Today, well, yeah, I'd like to say it's all about US CPI, but the market doesn't really seem to care about US CPI today. So,
yeah. That's the feeling I get to. Let's just cross over to the option side of things just to see whether anything has changed at all. Looking at the FTSE first, just having a look there.
FTSE vol as low as ever. I think we're looking at to look on CPI on an S&P.
And also there we are.
That as an S&P daily vol for a CPI day, that's telling you volumes. That's staggering. That's almost you wouldn't know that CPI was coming out today looking at that vol, and it just shows where we're sat with markets' view on macro news.
Yeah. And the continued vol crush as well, paired off with something that our trader friends are always asking me about, especially Fred, short interest. And so I just want to let you guys know that I did do some digging. And the most recent figure, Shrimp Fred, if you're watching, I've done this especially for you, that I have found recently is that short interest on the New York Stock Exchange rose 1.5% in late June. So this is as of June 30th. And the reason why we keep an eye on this is because short interest tells us it gives us a picture of the investors that are selling instruments or securities short, borrow shares, and then sell them, expecting the stock to fall so they can buy the shares back at a lower price. So is this indicative of maybe the market's kind of keeping calm, carrying on, if there is that sort of correction that some think, could be 3%, 10%, then it's a buy the dip situation?
Well, I think generally with the short interest, most of the shorts tend to come through the futures market. So people often shorting the index rather than the individual stock to avoid the borrow. And just the ease of the transaction. And again, if you're looking to infer things, you're probably looking more for changing the skew on an option. If you want to look at an individual name and you can look at the options, look and see if there's a skew onto the put side and how that's changing is probably as a almost better proxy for short interest rather than those stock borrow numbers. They're quite hard to interpret.
Shrimp Fred saying thank you. Look, he's listening. He says, I am listening. Shrimp Fred, send us, if you hit the like and subscribe button, also send us your questions on us@ig.com. And I can also send you the short interest information and also, put your questions to Matt and get them sent out to you. But ask IG.
It is always one of those kind of surprise. Everyone. The ability that you get from IG-led products is to be able to go short, and yet people still will overwhelmingly look to buy. It's an interesting one. It's very much still the flows are. People would rather be long stock short indices rather than the other way around.
I mean, I think it's a natural thing. Most people don't, just spend all of their time shorting. I find I've got a better hit rate shorting. Yeah, it's you can't bring that up during dinner, can you?
No. Section of people who go short stocks. It's one of these.
It is
been
frowned
rather
upon.
tainted.
Speaking of
whatever Michael Lewis tried to do for that perception, yeah.
Yeah, one of the things that our trader friends have been really, talking about this morning, the whole latest, Trump threat, Putin. Yet again, markets not
No one's
at all.
listening. Come on.
Don't look as if they are even, paying attention to this. Do you think
you might as well report Trump's chat with Cole Palmer.
Exactly.
Did he like chippy chips? I don't know.
Yeah.
That's a Cole Palmer joke for those viewers who like it. But yeah, it's pointless at the moment.
It feels as if he's trying very hard. He's trying very hard to create a headline, but actually markets don't seem to really care.
But then the markets haven't really cared about Russia for sort of 9 months now.
What is more important, I think, is what might come out. Perhaps August 1st. We had Dylan Rattigan on yesterday. He was saying that still short dollar, buy bonds, and producer Phil, were you saying something? Sorry. And call your mum. That's right.
I was going to say I thought we were and head for the hills.
Same as call your mom. Yeah. And so that was his view, and also quite a contrarian view. He said bet on Mexico because they've got the babies. America's got the babies. That's why if you go long, bet on Mexico. Anyway, we'll leave that one for another time. But in terms of short dollar, you agree with Dylan Rattigan?
Short dollar. It has been the play. It's still playing out. I think you're picking where you short it at the moment. As I say, dollar dollar yen has not been the vehicle. It's been a short dollar against Europe kind of play out. I think the risk on that trade is that I still feel that interest rates are moving in different directions across Europe and the US. So you're getting caught with the carry on that. So the yield might kick into that play again and make it perhaps not the structural play you'd like it to be.
Let's talk about NVIDIA, because our friend, our buddy Rich, slightly looking, uncomfortable. He's got an option strategy on NVIDIA. I know he's also, he says he has strong conviction, trader friend, strong conviction that NVIDIA will fall in September.
September? Okay.
Let's have a look. Should we look at the...
NVIDIA again, it's... We're back in the realms of all AI news is good news again. That NVIDIA be allowed to, obviously we saw what happened to NVIDIA with the threat of sanctions and shipping its chips to China there on the chart, and now that perhaps that whatever the A30s, I'm trying to think, is that what they are, A30s? AI30s
yeah.
Might get licenses to ship back to China, and we're seeing another pop expected to open up about another 4%, 4-5%.
I think they've confirmed that now, that it will resume sales to China. Yeah.
But every piece of news seems to be good news again in AI sector. Similar to the crypto world, where it's crypto week in the States, isn't it? Isn't that what the US government are suggesting, that this is the enthusiasm that regulation, which is interesting. Regulation is going to open the door. That makes things better.
Yeah.
I suppose it democratizes it, but perhaps it normalizes the market. But yeah, NVIDIA going strong at the moment, continuing to go strong.
Yeah, and the chances are, I think, as well, that with the lack of any other news, before earnings start to kick in with the banks and everything, trader friends, here's one. If you want to continue trading NVIDIA, the next big thing for the AI space is this coming Wednesday, because Jensen Huang is going to be talking in Beijing, and he is attending this supply chain expo. Have you ever watched one of his presentations?
I've not, but I'm not thinking Jensen Huang is going to say anything that would make NVIDIA's share price go down.
Well, no, I'm saying it could go up even further. Look, get with the AI thing. Get with it.
I know how it works. I know how it works.
Wake up. Look at the chart. It's the trend is your friend, people, trader friends. And so there is, if you follow a lot of the Twitter spaces that are, almost like cult-like, and they follow his every word, it is likely that he's going to say even more good things in Beijing at the Supply Chain Expo. That will suggest that it's not just the H20, but other chips that will be tweaked, shall we say, so that they can then be sold widely available to everyone in China to help them in their, AI efforts. So what is also interesting is that the likes of Huawei will be there. All the other rivals will be there as well. And so those of you who have never watched him speak, this man is, I don't know what vitamins he takes. I'd love to have some. He's not exactly a spring chicken, but he can hold.
If you were to put on your leather jacket, and you'd be, that new lease of life just like it.
I know, we speak here 3 hours a day. What am I talking about?
Yes, exactly.
Right, so Maturin coming online there. Talking about the Discord. Have you checked out the Discord recently? Have you?
I haven't checked out the Discord, no.
You are a star on the Discord, because I hear producer Phil did something naughty yesterday.
Well, I was expecting to come on air to it's time to play the music. It's time to light the lights or something. A cheeky Muppet show.
Yeah, cheeky Muppet show. Look at you and that knowledge. Woo.
There we go.
There we go. I have to say that I think your AI rendition was a lot more complimentary than mine. Speaking of complimentary, let's have a look at some of the house builders. Because
the house builders suffering this morning. I call it Barrett Development. I don't think it's called Barrett Development anymore.
No, not anymore. Not
Barrett, Redrow, Barrett, yeah.
What a terrible name, but hey.
it's a game, isn't it? House builders, and one looks at the charts, and you think it's quite simple. Every 6 months they have a profit warning, and they climb up steadily, and then they warn again. So there's perhaps a cyclical thing to go there, but no, another sort of sharp down move and across the sector. Perhaps not what Rachel Reeves wanted to see, given the thrust of her announcement is around, or expected announcement this evening is around giving mortgages to people who can't afford mortgages. The structural problems with the market are supply rather than availability. Build more supply and prices come down, apparently.
Apparently. So, yeah. Also, the other thing is all this help and apparent help. But then again, if you speak to anyone in that space, there's still a lot of red tape concerning, freeing up brown spaces, brown land to build on. So where are they going to build all these new houses?
Well, it's
only way is up.
Yeah.
And then what then happens? You then get, pushback by people who are living in those areas who don't want these big, apartment blocks that are springing up all over the place.
Well, and of course there's, I don't necessarily think the shortage of supply, particularly in London, is in the 1 bed and 2 bed flat sector. There's a lot of building going on there. It's in the next stage, and places where people want to live once their families grow, and that's where the supply issues are and have remain the case.
Well, they have these apartments and then go a few years down the road, oh, there are no schools or playgrounds here.
Well, infrastructure also, yeah.
Right, so let's have a look. Put my infographic up. We've got this here, just showing you some key challenges and what is expected. Matt Arbour, take us through.
Well, I don't know. I think sort of one of the interesting ones is after months of throwing around the idea of making changes to ISAs that it's suggested this isn't going to happen. I don't think actually that's a great deal of surprise that didn't sit well with the populace, with the voter group to take away the
building
cash
societies.
Well, the building societies as well, but of course, if you want to encourage lending, the building societies are there. Who's going to lend to people on the basis of their rental payment if it's not the building societies? But that polling well that the reason people aren't putting savings into stocks and shares is not because of the ISA structure per se. It's probably because of stamp duty.
Yeah. And also the high cost of living.
Well, the high cost of living as well, but if one subscribes to a cash ISA, it's cash. There's no fee to do it, and one is protected. If one invests in the stock market, you're hit with fees up front and perceived fees on withdrawal. That's it doesn't sit for people, or for most people, as a cash proxy or as a liquid investment which they can draw down on. However, people won't touch their ISA savings. They like to think that they could withdraw from their ISA tomorrow, which is not the case with the stocks and shares ISA generally. So it's how you change the dynamic for saving there. Rachel, if you're listening, scrap stamp duty. That's the play.
Rachel, not only scrap stamp duty, but up the education gap as well, because that I think is a huge failing, huge failing that the government is not addressing. We talk about here every single day, we talk about, and I think you've hit it on the head, that L word, liquidity. Rich and I, talk about, being smart, looking at statistics, what, gives you better returns. I talk about duration all the time, but you don't have this generally. And in places like Asia, not only do you talk about it at the dinner table, you talk about it when you're, doing the washing up, you're talking about it in school, whether your kids, whether they like it or not, understand compound interest from the day they come out of the womb. Compound interest, right? Straight away.
Yep.
Don't have that mentality here, and we really, really need to get our act together. Some of the other questions surrounding, red tape. Do you think she's actually going to be able to reduce red tape? We've already seen a rolling back by the Bank of England. We've seen a rolling back by, the various government organizations here saying that actually, we're trying to push this through, but it's too soon, too fast.
Well, we spent years in financial services of building red tape I can't see that being rolled back anytime soon. The natural pushback. There's a whole industry that has grown up. Like the City of London is very good at employing people to enforce red tape, and it's the world of compliance has been the boom world for the past 20 years in the city. So it's vested interest. It's an interesting one to think. Deregulation. Is Rachel Reeves going to deregulate things? Probably not. No.
Yeah. And other policies that are under consideration, the
wealth tax, they've not trialled it long enough, I think, for current governments. This is their kick around the idea, float around a few more focus groups, but I think that'll remain top of the agenda. This always polls well, doesn't it?
It does poll well.
As soon as you pick a line that is perceived as out of reach, £1 million too low. Yeah, that's an aspirational level. Let's go to 10 million and see that polls well. People don't think they'll get to the 10 million.
There's also a cycle too, whereby they can talk about it now, but when it comes near to the election, it kind of peters off into the horizon.
The worry here consistently is pensions are the easy target. In that self-defeating government style whereby what is part of the big debt problem, it's paying for state pensions, national insurance is not going into pension funds. This isn't sat there accruing money, it's being spent today on the NHS. There is no money for pensions, and yet we're going through cycles of disincentivizing people to contribute to the pensions themselves. Like the only legislation that's come in has been to force people to, rightly, to start their pension scheme, but the incentives to contribute have diminished greatly. So it's one's building problems to rebound in the future. And
Shrimp Fred there listening to you saying cash ISA, it's known the capital won't shrink when you need it most. There you go, that L for liquidity again.
Well,
also taking a look at growth, we're looking out for any sort of confirmation of if there's any sort of stimulus whilst managing this debt to GDP ratio. So for the city itself, they fear a rise in a bank levy. Just very quickly, thoughts on how this might affect the pound?
Speech night, I don't think the pound will move on anything she says this evening.
It's probably going to be the, keep calm and carry on. Not much changes, right?
Yeah, we tend not to get surprises. Everything is trailed. There's the days of central bankers or politicians saying things that haven't been floated, apart from in the world of Trump, and no one's listening to him anymore. Seem quite far gone. The days of Treasury secretaries deliberately changing their language because they wanted to do something. We're not really in that world.
In that world anymore.
Like to say the glory days of Alan Greenspan or
Volcker.
Volker's a bit far.
I actually met Volcker.
Irrational exuberance. I was enjoying,
inflation. I keep hearing his name pop back up every time we talk about, inflation perhaps coming through the fourth quarter. Right, we need to wrap now, but if you want to know what time Rachel Reeves might start her speech after a strong glass of brandy, stay tuned right after this, because we're going to do that, talked about that, and also all sessions with me. Thank you so much, Matt. Always a pleasure.
Thank you.
Right, and we will have a good week. Matt is off on holiday, and that's why he's got that holiday glow. All right, see you soon.
Cheers.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest, and it's days like this. We get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Hey, we're going to ring the bell straight away because Jack and I are doing all sessions. Here we go. And it is now out of the gate. And we are seeing, here's the winners list first. Beyond Meat, they're up 4%. NVIDIA, that's the one I've been looking for, up 3.6%. This is the great thing on IG. You can take a position ahead of the cash open. And prior to this, we were talking about NVIDIA and the fact that over even in Japan, in Germany, its shares are riding higher. I was looking at cable makers, Japanese cable makers, which is a gauge for data centers. They were all rising overnight, and also the chip-related stocks as well. Any of the other names there that you like, Jack?
MicroStrategy there down quite a little bit. You can see that.
Yeah.
None of the others there that I'd be looking out for. NVIDIA was the main one on the list today.
Yeah.
Where else can we see?
Also, Riot Blockchain, some of those are also down quite heavily. Big consumer names as well. General Motors down 1.2% there. And let's have a look at Oracle as well. Here we are. Oracle all sessions up 0.75% there. And just adding that to Workspace and getting the news for you. Oracle is set to invest $3 billion in AI and cloud infrastructure in Germany and the Netherlands. AI is now hot again after a brief interlude. Concerns about whether it's going to be sustainable.
Yeah. But I think everyone's very excited about it. The news comes in and you get into these scenarios where everyone sort of rides the hype. I wouldn't say it's a bubble just because it's probably not been far enough, but you see the S&P rising over these past months, and then all of a sudden AI becomes the story again, and these AI stocks are the ones that just lead the charge, aren't they?
Yeah.
Yeah.
Trader friends, tell us what you are trading during all sessions, because I'd love to know. Some of the ones here that are moving higher there. We got SoundHound up more than 2%. RSAX checking that one out for you. But we also have Novo Nordisk up 0.75%, and also we have Supermicro up as well. So interesting, almost like markets are just shaking out a bit there. Let's have a look at the indices as a whole. Come off that for a second. My screen is very, very sensitive. Every time Luke comes in here,
You reset your screen.
he moves. He's not just resets the screen, but I know he's been here because this is it's very close.
Right. Okay.
I didn't realize, but Luke is more blind than Rich and myself.
Are you blind yourself as well?
I'm pretty blind. I'm like -800.
Right. Okay.
He needs the screen even closer. Right. So looking like risk on today, right? And really the FTSE just crossed the 9,000 mark again.
Yeah, it came off a little bit just after the open. I think it seems like everyone's still shy of it, even though we've got there now.
A bit
It's
shy,
been
right?
done. Yeah.
It's like a first date.
Exactly. But
Jack's first date.
with the FTSE.
Do you think the FTSE is going to be able to close above 9,000?
Probably dependent on what we see today. I'd like to think so. It's sort of been trending there, and it wasn't actually too long that we were rumouring that it would hit 9,000. I think the end of last week it looked close, and then obviously got it in the past 24 hours. So it should be able to keep on track. Probably dependent on what type of figures we get today. Obviously we've got CPI, but not too much weighting around that at the moment. So maybe a bad print or a very good print dictates whether or not we get that FTSE 9,000 at the end of the day.
Yeah. At the moment, it's looking like we have a bit of downward momentum here. Do you prescribe to the 1 hour rule, Jack?
Go on, explain it to me.
1 hour rule and just 1 hour rule. I mean, this is my humble opinion here, that in the first hour of trade, it normally gives you an indication of the direction of travel.
Right, okay.
So in the first hour, if you see a huge amount of momentum and it keeps going higher and higher, reaching for the skies, you know that there's a huge amount of momentum that will carry this instrument through.
Right, okay.
To maybe like the next big junction, which is normally data at around 1 o'clock, 1:30, right?
Yeah.
But then if you see it falter, then it's likely that that stock will continue to falter after then. It's just
Right, okay.
a gauge. It doesn't, it's not like 100%, but it gives you a good sort of indication.
Yeah, I need to keep that in mind next time. Next time there's a day like this.
Yeah, so Shrimp Fred, who's watching, and our number one person on our chat today, not often does someone beat me because I'm always giving the downgrades and upgrades ahead of the opening bell. But Shrimp Fred is number one today, asking, does it close above 9,000? Well, at the moment, if it abides by Angie's 1 hour rule, and also a key thing to watch out for, Shrimp Fred, is the volume as well. Can you see at the bottom? This is the 1 minute chart here. Volume starting to peter off there. So unless there's any sort of catalyst, it looks like it may not be able to, keep that momentum support.
But as you say, you get towards 130, US Open, volumes rise back up again.
Exactly.
A little bit.
So that is your next sort of junction, right? To make another call. So speaking of that, let's take a look at the options. Which one do you want to look at first?
I think S&P's the one that always dictates
we have
it.
CPI as well.
Yeah, S&P daily. I mean, I've just been looking at it at the desk there just before I've come over, and it's low for a day where we have CPI.
I know, right?
Which, I mean, it doesn't feel like too long ago was the main figure and the main driver.
This figure to me normally, or to us, looks like a day when there's no CPI.
Exactly. Yeah, it's remarkable. And also, vol has come off the floors now. Last week I was in on the Friday, I think, and we just had some Trump comments. I think we came off overnight, and the vol had come off that sort of floor basically that we've been sat on for 3 weeks previous. So even that low figure there is extremely low because we're not at the 11-12% that we were in the previous week. We've actually come off that level. So it's very, very low for a CPI, not a lot of weight at all. And it's the same with the FX space, to be honest.
Yeah. And just for some kind of context, trader friends, when we had that April tariff tantrum, Jack and I were like that. I was out. It was hitting 40 at one point.
Yeah.
So there is a huge difference. Just even looking out to the weekly here and expiry 18th of July, they're still very low, isn't it?
Yeah.
13, 14.
Really quite low. I think once you get past August 1st, you start to see it rise a little bit. You can see that with the VIX contracts as well. Obviously, that's what it's deriving from. But you'll see there, you start to get a little bit more of a premium on top of it in terms of the IV. But yeah, it's just, for a day where we've got CPI, that is minuscule in terms of vol. Decent opportunity there. Even the skew that you get on either side isn't as strong as you'd probably expect, especially the downside.
Right, we have 1 minute to go. Let's quickly get to the Mansion House speech.
Yeah.
I was talking to Safe Harbor, Matt Arbor earlier, and he was asking, me what I thought would come out. I just think it's going to be a muddle of keep calm and carry on. She's expected to, reveal perhaps more stimulus for the housing market, but then the problem is always in the back end, right?
Yeah.
How do you then translate this into actual houses being built? You can announce stimulus to get houses built, but then you have the blockers for brown land, the blockers in terms of red tape, all that has not been lifted.
Yeah, exactly. And it looks like they hail it as a deregulation push, but you wait to see what actually comes out if it's a deregulation push.
Yeah.
They're not going to undo a lot of the stuff that's come previously. And I think in the back end, you get all of these wealth managers who are secretly just wanting to find out what their tax bill is going to be next year. I think a lot of the push has been to keep all the millionaires in the country and stop this exodus that they say is happening.
Yeah. Did you know that they're selling one bedroom, I call them one bedroom because they are 1.5 really, bedroom flats in places like, they're not even like super exclusive. They're kind of like a long way down from Harrods, right? Think about, like, towards not Excel, but the Westfield of the East.
Right, okay. The White City, is it?
Not White City, but close to there.
Right, okay.
And it's like a fancy name, right? And guess how much? 1.5 bedroom flat. They say it's 2, but actually 1.5 bedroom flat. Trader friends, if you know, put it on the chat and let me know. We've got our bond expert next, Reza Ahmad. Thank you so much for joining us.
Thanks for having us.
If you have bond-based questions and comments, get them in. Also, if you've got questions for Jack on volatility and where markets are headed this week, do slam them here on ask@ig.com. And don't forget to hit the like and subscribe button. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Welcome back, everybody, to our Bond Corner. That's right, we've got Reza back in town. How are you, Reza?
Great to see you, sir.
And to you as well. Thank you so much for coming in yet again. Sometimes we invite you in when things are looking dangerous and sort of risky. But what do you think at the moment? How would you describe what looks like rather smooth sailing in the waters ahead?
Yeah, I mean, from the stock market perspective, I mean, the S&P has kind of rallied a little bit since, the concerns over tariffs a couple of months ago. So it's around above 6,200 now. So, I think there's a little bit more, people are looking through a little bit more. So they're kind of ignoring a lot of the bluster that Trump is putting out about tariffs. I mean, there was a bit over the weekend again, the threat of, putting 30% tariffs on some blocks like the EU and Mexico, over the weekend. But I think the market's kind of looking through that because negotiations are going on up until the 1st of August. So it hasn't actually impacted the markets like it did the first time around, So
Absolutely.
Things seem to be kind of stable a bit. So people kind of understand that, this is rhetoric, and then they just want to wait and see what happens and just wait until that point.
Is that from disbelief or actual, to coin the phrase tackle, that he just won't go through with it? There is no way that a 30% tariff will be applied to Europe on August the 1st.
Well, I think, look, it's important if we look back at Trump's first term, the net effective tariff on the world was around 2.5% that he implemented.
Wow.
At the moment, it's 16.6%. So there's a big change, right? People are not baking that into their calculations. So he has really changed the whole nature of trade.
Yeah.
The US is charging, the world a lot more, to enter its market. And, so when people say, is it just bluster? People don't believe he's going to put that rate up. The fact is that the evidence is not bearing that out. So he's actually doing it. And, there is a negotiation going on. Whether it ends up being 30%, is probably not going to be 30% for the EU and Mexico and other nations.
Yeah.
It varies. It's changed for lots of different countries. But
excuse me.
We'll see what happens on the 1st of August. But I think the way the market's reacting is this is just more continual, negotiation, and they don't really know what's going to happen until.
But it's a real two-way pool, isn't it? Because if you see a growth slowdown,
yep,
and the slack in the unemployment factor, that's what Andrew Bailey was talking about, this idea of slack in the jobs market. You see too much of that, we need lower rates in the short term. But if you take tariff rates from 2% up to 16%, then you've got an inflation problem. So Jerome Powell's in a really tricky situation, but that's not the only reason he's in that situation, is it?
I think the interesting thing is people looking at the data, and right now the Trump's advisors are pointing him to the fact that consumer inflation is still at 2.5% in the US. It hasn't gone up. It does look like the tariffs are actually impacting the producers, the companies who are importing it. So it's going to come out of companies' profits rather than it being solely just a price increase for consumers, which obviously would push inflation up. So I think people still need to see the data to really work out what the magnitude is, but it does look like it's split between both a price increase as well as, a profit loss for the corporates who are importing.
Yeah. So if we take a look at bond yields now, we see up there the 10-year 4.42 in the US, the 20-year 4.95 and 4.96 on the 30. How would you describe that long end compared with the 2-year at 3.9?
Well, I mean, look, obviously, we've discussed this before, but the longer the maturity, the greater the risk, right? Because there's too many things that can go wrong in between, especially when there's lots of uncertainty going on. Short end rates, in my view, are attractive because, look, the US economy is not going to fall over right now, and consumer inflation in the US is 2.4% at the minute. So, technically speaking, Trump's, outburst of the weekend where he wanted to see Powell reduce rates to 100 basis points, the Fed rate, or get out effectively. There is some justification for that, and I actually think one of the plans that is in motion, we'll see what happens. But basically, I do think that with a lot of this stablecoin legislation, like the Genius Act and others that are going in to legitimize regulation around stablecoin issuance in the US, is part of the plan. So I do think that, issuers of stablecoins, what they do is they back it with government treasury, so the US Treasury bills that are issued.
Okay.
So by having a lot of stablecoin issuance, whether it's JP Morgan or others
You've got a new buyer of
doing
treasuries.
it. You've got a new buyer of treasuries, and that demand will help to bring down short-term rates. And it also, because of the short-term nature, because it's backed, the stable coins are backed, they can be leveraged and all kinds of things, and so I think one of the strategic plans of the Trump, this is just my view, the Trump government, is that they are going to use that stablecoin demand, because actually the growth of stablecoin transactions has been increasing quite significantly over the last 12 months. That demand for that issuance, I believe he's going to use that to get demand for short-term treasuries. He's going to force the Fed to lower the rate, and he's going to get some cheap short-term funding, and then hope that the rest of his policies actually engender growth and the tariff, revenue does work out the way that he wants.
Yeah.
And then kick the can down the structural problem, which is there's way too much debt in the US. Kick that can down the road. So that, I think, is what the plan is. What does that mean for markets? Well, I think what that means is that there's probably a very good chance that the stock market continues to be propped up, continue to creep up for a while. Obviously there's a bit of uncertainty to see, but I think that's what's going to happen. I think basically the key thing is that markets want to see, or investors generally, who are heavily invested in the market, the big boys like the BlackRocks and things like that, they want to see liquidity stay there.
Yeah.
So you're going to have more of the same that we've had since 2008, which is liquidity pumped in, spending. It will cause inflationary effects further down the road. There will be structural problems because the debt may very well increase. The big beautiful bill, is an inflationary bill effectively. But at the same time, there's also, Trump is also, changing the game by, bringing investment into key sectors like AI from capital from the rest of the world, and also the tariff policy may work out. So we'll see. But
yeah, where does that leave the long end though?
So
confused
because I think long term people expect yields to rise, so the long end of the curve, so you should expect the yield curve to steepen.
Okay.
Right. So what they're going to do is,
and just take for people that aren't bond experts at home, take us through what that steepening means.
So just think of like a hill, right? So if you think about plot the maturities of all the different treasuries, so you've got your 1 year to 10 year to 30 year, if you think about it on a graph, it's actually the short end, or which is the 1 year to 10 year end, is going to flatten, so it's going to reduce down. So you're basically getting steeper. It's like a mountain which is the incline's getting steeper. The higher rates are going to be at the long end or the 30-year end. So basically, this is what's happening, is that it's going like this.
Yeah,
effectively, that's what's going to happen.
By the 6 month or 2 year going lower on yields, and the long end going higher, because
that's right.
Concerns around the financial health of the US, or the inflationary effects, or
so I think most people will realize that it's basically a structural lack of demand for long dated government issuance right now all across the world. You've seen it in Japan. No one will touch a 30-year. It's just, there's a big, actually, the Japanese curve is very interesting. After about 10 years, it really starts to steepen.
Right.
So it goes like this, like that. So there's really a lack of demand at that end. Same is happening with the German bond yields, and same with UK and the US. So basically, we're in a world where long dated government bonds, lack of demand, so yields are going to go up because there's more risk. But basically, a lot can happen in 30 years, if you see what I mean.
And is there any after effect of that? Have you seen that in your career before, where there's suddenly from 10, 15 up to 30, it really steepens?
Up until the last few years, what tended to happen was actually that the long end rates used to be a little bit more stable and actually come down, because we're just in a different climate now, where people are thinking about the long-term sustainability of things, right? So I think what's happening is all the big players and the market are getting accustomed to the fact that governments are going to be funding themselves more on a short-term basis.
Okay.
Like
Yellen. was doing at the wrong time.
Yeah. And this is why I think that you should watch the stablecoin space, because so what people don't, a lot of people don't understand what stablecoins are, but basically, effectively, it's a currency which is backed 1-for-1 with, you know, for example, U.S. Treasuries, you know, which is the most common thing. So basically, it's asset backed effectively, and that keeps the price stable. So
are we talking like a JP Morgan coin or a McDonald coin?
It could be anyone can issue a stable coin who's going to be, you know, authorized by, you know, the SEC. I mean, same thing. We don't like him over here. Andrew Bailey doesn't like stable coins, but you know, in the US they're plowing ahead with it, so they're going big into crypto. The reason they're doing it is because, you know, it's creating a new asset class to you know, and somewhere for the money, all the money they're printing to go. You know, so you know, it's it actually keeps consumer inflation down.
Yet again, they've got a problem, and they imagine up a new solution to solve the problem, which then in turn potentially creates further problems.
The interesting thing is that stablecoins actually do have real practical use cases, right? So they actually bring down transaction costs significantly, and so using blockchain rails, you know, decentralized systems, you know, can actually reduce the cost of a transaction to like 5 cents versus like a bank, which is like $25 to $50 per transaction. So you're starting to see even Visa and MasterCard are getting into the action. Then maybe, you know, Stripe is as well, because they all realize that the existing models where people were paying for things on like expensive credit cards, as well as using banks for expensive transaction fees, you know, adds up. You know, if you issue a decentralized stablecoin on a, you know, running on rails, like, you know, efficient blockchain rails, it can lower transaction costs much more quickly. And so, you know, there is a real benefit from that. And that's actually why stablecoin, you know, transactions have actually increased significantly since 2004, quite significantly, actually. I mean, I don't have the numbers off the top of my head, but it's really quite significant. So I do think that's going to be a big area going forward. And obviously the government regulation is moving that way. Now, just one thing it's worth saying is that, you know, people thought that was what Bitcoin was going to be, you know, but Bitcoin, you know, is expensive, you know, in terms of, you know, how long it takes to transact and things like that. It's not using, you know, efficient rail
it's not
system.
A payments.
It's not really a payment system. It's become more of like a, you know, an asset, digital gold, as what they're selling at. So it represented a new technology, but in reality, what it is just now is a store of asset, you know, a store of value. And interesting, that's why Bitcoin's gone up massively, because people are concerned about the dollar, right? And they are concerned, you know, I mean, it needs to be propped up. That's what the Trump government is trying to do, is to prop it up, because it has been depreciating. You look at the DXY, it's been coming down, you know. So, you know, people are using Bitcoin as a safe haven. Treasuries, corporate treasuries are actually now buying Bitcoin for their treasuries. I mean, you've seen that, you know, there's people who are raising off the back of that, but just actually regular corporates are actually buying Bitcoin to hold as a treasury asset, like a reserve. You know,
makes sense. Or, you know, force me into fiat currency. Or, you know, why not?
So I think Bitcoin will continue. The way the policy system is working, the way the big guys want things to go, like BlackRock, is, you know, Bitcoin will go up in price. You know, this is, you know, for the next kind of foreseeable future. I mean, things can change, but there'll be stablecoin issuance. The low end, the short end of the curve, or, you know, short-term government bond yields, treasury yields will go down, you know, hopefully. And so I think what you should expect is kind of the markets to grind higher, you know, because liquidity is being pushed. And so it's going to be very tough to, you know, short the market right now, even though US valuations are completely out of whack with the rest of the world, right? So if you were looking at, you know, multiples and business value, you know, US companies have higher multiples because of the fact that the US is the most liquid market. It's got the infrastructure, you know, everyone's been sold that. That's you know, that's where all the money goes. It's very easy to, you know, buy the S&P tracker and everything like that, you know, on your iPhone or your smartphone. You know, I do think eventually, and I don't know when, there is going to be, it's already started, there's been a bit of a rotation already. There's going to be a bit of a rotation into international stocks.
Yeah. Oh
So-
God, we've seen that.
If you look at the outperformance historically, I mean, like the S&P is grown like 5 times the international stocks, right? And that's not just simply because there's been great technological innovation in the US and there's big companies like Google and others who've driven the value in the US, of US stock markets, but it's also that there's just a higher valuation applied for US stocks.
Sure. What about if somebody is feeling a bit more risk averse, right? They've seen since April the 10th, they've seen their investment fund, whether it's pension, ISA, SIP,
Yep.
go up by 25%
Yep.
or 35% if you're in the more lively stuff. Say they want to take some of that profit, the amount it's gone up by, and put it into gilts, for example.
Yes.
What do we think of gilts at the moment?
Yeah, no. So look, if you're getting more risk averse because you're kind of getting on in age.
Was that a dig?
Well, well, yeah, exactly. But I think it's. I can tell you that the liquidity that's been pumped into the market to keep the stock markets, creeping up at the moment, is to give time for some other big players to, refinance their businesses if they're leveraged or take money off the table. And so, if you're a retail investor, you don't necessarily see that, but this is an opportunity if you are risk averse, to potentially take some money off the table because you've made the gains, on the stock market in the US, and put it into something less risky. I can't tell you when the stock market's going to get to a point, and then it's going to start tailing off a bit. But
we see gilt yields on the screen there. So what options are out there for people that want to get involved in gilts?
Well, so in the UK, for example, look, I mean, I think gilts between 1 and 5 year are very interesting, particularly those gilts which have a low coupon. And the significance of that is that, low coupon bonds mean that you're going to get paid less. You're going to pay less income tax on that, because you have to pay income tax on the income or the coupon.
Yeah.
Right. So if you've got a 0.125%,
it's as low as
gilt,
that.
right? Some of them have been issued at that level, then most of your return is made up because the price is trading at like 97, or you're in the 90s.
Yeah.
And so it's capital gain, which is going to give you your overall return to get you to, that 4%, yield. And the important thing is you do not pay capital gains tax on qualifying corporate bonds or gilts in the UK. So basically, if you're a higher rate taxpayer, it is better for you to buy a low coupon, so low, which means you pay low income tax, low interest rate gilt in the next 1 to 5 years, 1 to 5 year maturity, because it's basically almost tax free, effectively. Right. And so we on Wise Alpha have that selection. We point people towards it, say, and describe, and actually we've done zero fees as well to encourage people to do that, because, if you can make, effectively kind of 5.5 to 6.5, 7%, some of them for longer dated, kind of gross equivalent yields. What I mean by that is, what is the equivalent yield you would need to get from a savings account in order to generate the same after-tax return? Right. So, gilts are actually better for higher rate taxpayers. Gilts are better than savings accounts right now.
Wow.
So 1 to 5 year gilts are really interesting.
And Rachel Reeves, to speak tonight at Mansion House. Are you off to Mansion House tonight? I can imagine you getting the invite.
No, I'm not going to tonight, but I do keep abreast of it. But I know she's got a lot on her mind.
Yeah. And you've got potentially that gap now that she has to fill up. So what do we think UK yields? Would you feel safer in gilts than treasuries, or what way round is the preference at the moment?
Well, I mean, if you're a UK investor, you want to keep it in the same currency. You don't want to take that currency risk. So yeah, I mean, like if you're asking me which is safer, the US or the UK, I mean, to be honest, it's much of a muchness. I mean, if you think about the US is more highly levered, right? Its debt to GDP is like 121%, versus GDP. UK is about 98, something like that, or 97%, something like that. But the US obviously has a much stronger, innovative productive capacity. So they can sort their problems out if they do the right things. It's just whether they continue to be greedy, which is basically their problem. The UK, we have a different mindset. We have a mindset of trying to balance the books. So Liz Truss, for example, is looking over jealously at what the Trump government is doing, which is just try and spend their way out of trouble, inflate away the debt. If that's what it comes to, they're obviously actually got some actual real possibility of structural growth, which can help offset that. But in the UK, we don't have that same capability, so it's harder.
Which she was trying to generate, wasn't she?
She was trying to increase spending, do tax cuts, things like that, try and follow what was happening in the US. The difference is that we have a slightly different political climate over here, where there's a focus on balancing the books, and so this is the pressure that's on Rachel Reeves. If you don't balance the books, then there's a pressure from the establishment, to push you out, and you don't want to.
Which feels like it might be coming.
Which it might be. I mean, obviously, look, Starmer is, backing her at this minute, after her, a little bit of emotional weakness, which kind of caused a bit, unsettled the markets a little bit. I mean, it's basically people, want to see a chancellor that, has control over the economy, has, confidence in being able to manage the books, and to find revenue and drive growth. And unfortunately, I think the market's a little bit concerned about Rachel's or Reeves' capability of doing that. So we'll see what happens.
And what about if we into more corporate bond market in the UK? Are you seeing anything interesting there? I noticed I got some Punch Taverns cash out.
So the market's becoming a bit more kind of stable. Has actually created a window of opportunity for, UK corporates, as well as obviously the US and the rest of the world, corporates to refinance some of their existing bonds with new bond issuance. So, for example, like in recent weeks, Punch Taverns refinanced at 6.25 or secured bonds, and issued 7.75 bonds. True Potential
7.75%. For a pub chain in the sunshine.
That's right. Yeah, with all the assets, all the pubs that they own. It's, I mean, it is decent. These are, so all of the companies, who are issuing now tend to have, some good qualities,
right.
Like as businesses, the more riskier ones, they're still going to find it difficult to refinance. But the higher quality companies which are coming to market are able to do that now because the markets are stable. Things like Punch, where it's asset backed, are really interesting, because that's, if something happens to the business, you've got that asset value which can help you recover your money. But they are issuing at higher rates. So people ask the question, so why, if Punch is such a great company and it was only paying 6.25% before, why is it now paying 1.5% more? If it's such a good company. And the answer to that is just because the whole rate environment has moved significantly since they did the original, issuance.
In 22 or...
in 20, it was like 21, something like that. Right. It was original issuance. So basically, inflation has spiked, rates have gone up, central bank rates have moved from whatever they were, 1.5 back then to 4.5, now. So it's basically, that's really why, and that's also a good opportunity. So if you do believe that, rates will come down, at least in the short end, or 1 to 5 year, 1 to 10 year end, then actually what will happen to these bonds, which are now issuing at high coupons, is that their price will go up. If you think that we're going to go down to maybe 3.5% on interest rates, over the next 12 months, if you believe that,
Which, the rates coming down allows the stock market to be where it is.
Yes.
Rates going up, the market crashes 25%.
Sure. Yeah.
So your money's better in bonds, isn't it?
Well,
either way.
Well, so there is an incentive not to increase rates any further, right? Because, the global players, the BlackRocks, you know, the advisors to the US government, you know, and the rest of the power players have decided that, you know, we need liquidity in the system. We need time to, the whole market needs time to kind of sort itself out, you know. We're not going to start hiking, you know.
Unless you're in Japan?
Well, look, unless you're in Japan, that's a different story.
Is because that is one of the questions from Marcus Kane, which is a good question.
Yeah.
That is there Japanese tightening? Does that put significant danger in this plan?
Well, I mean, look, Japan is it's a managed central banking system. So honest with you, the same power players in the US which control US monetary policy control Japanese policy.
Okay.
So they will make sure that, for example, the yen carry trade doesn't unwind, and that short-term rates are not going to jump massively.
The Yellen phone call when it happened last time.
It's not. You're not going to. I don't think that you're going to see a massive spike in short-term rates in Japan.
Okay.
They obviously have a problem with long-term issuance, right? You know, it's like 3.2-ish%, I think, you know, the 30-year, you know, but the spike after 10-year, it goes up quite dramatically. And so the market doesn't want to touch that end. But you're not going to see, I don't think you're going to see, because nobody wants that carry trade to unwind until everyone's kind of fixed themselves, right? I think, you know, so I'm not concerned about that. I do think that, you know, for example, in Japan, if you're just looking at that, you know, the next election's coming up, they are concerned about the impact of US tariffs. They generally have fiscal concerns over there. You know, that is also going to, there's also going to be a desire to therefore keep rates low,
right?
You know, for the time being. So I'm not particularly worried, even though that's
yeah. Okay, we've got some great questions coming in here. So high yield,
yes.
ETF at all-time highs. How are the high yields, and why is that?
Well, the yields that in high yield right now, I mean, if I just take sterling, for example, which is our speciality, you know, you're talking about issuance at 7.5 to 9%. You know, some have been issuing at, some bonds had been even issued at 10, 11, 12, you know, in the last year. So the yields are high.
Yeah.
And so that's attractive. And the market's stable, liquidity's being pumped in, you know, and so, you know, there's a lot of demand for that extra yield. And so that's why, you know, high yield ETFs are going up. I mean, we've seen over the last 3 months, actually, you know, after the uncertainty of the tariffs has kind of been removed, or people don't care anymore, you know, bonds were, you know, had jumped 4 or 5 points, you know, where there was a little bit of concern. You know, I mean, it's not on every case, you know, not all across the board. I mean, some like Ocado, which is actually, you know, has dropped a few points, you know, which is actually a good opportunity. That's because of company specific reasons. But,
right.
You know, yeah, I mean, it's, just, you know, we're where we are, you know, when, you know, like, you know, remember right after the pandemic, you know, as we were in the pandemic, people were very bearish and they were short, you know, and, you know, but then there came a point where the mindset changed, and it was like, we're just going to flood the market with so much money that we're going to keep.
And it's still sloshing around.
You've got to learn that you can never fight the Fed or a US government who's willing to, like, fiscally buy its way out of trouble, you know, even if it's going to keep pushing the problems back further structurally in the end. So from a market perspective, all assets are going up basically right now.
Yeah. And if we talk about high yields, the main story on the FT today, if we just want to cut to that, catastrophe bond sales. So this is, as you know, we see, looks like Steve Irwin in the wrestling a crocodile there. You know, the worries around the natural disasters, insurance companies wanting to offload these the risks.
Yeah.
And bond yields bond funds are lapping them up.
Interesting. Yeah. I mean, but there's been a lot of, you know, I mean, without getting into the kind of conspiracy theory world, you know, natural disasters seem to be, you know, in specific pockets seem to be quite serious. You know, in general, overall, that it's not like they're massively up, but there does appear to be like quite, when it does happen in some places, it's quite severe, and it's almost as if it's engineered. You know, so I mean, Trump's mentioned that, so we're not going to go there, but yeah,
But
I mean,
the
like,
risk is
you know,
spread around. It says the only ones that have really caused bondholders losses is Katrina, and you know, nothing recently. Touchwood, obviously that continues. But if we're talking about you know, what we see with the fires and
yeah. Well, look at, for example, the fires in Los Angeles, right? Before they happened, mysteriously, all the insurance companies didn't want to provide insurance on the properties, you know, just before, you know. So, you know, I mean, you know, Trump noted that. I mean, that's about as far as it's gone. But look, there is generally a trend to take risk off the table when you're a little bit uncertain about climate change. I mean, you know, look, most people understand that, you know, what drives, for example, warming, you know, is water vapor, you know, not carbon dioxide. You know, so the policy, you know, the net zero policy of the Miliband, you know, department, you know, I mean, it's complete nonsense, right? I mean, it's just nonsense. I'm just going to say that outright, you know, and it's actually costing the UK growth, you know, so I'm actually quite angry about that.
Yeah.
You know,
do you think she might address what can she address tonight that frees that growth in the UK? Is it going to be regulation?
Well, the government as a whole, and, you know, look, I mean, you can start moving away from these growth inhibiting climate policies because it's based on faulty science, you know, and everybody knows it, right?
Yeah.
Both China and the US, which are the largest economies in the world, have like thrown it in the dustbin. You know, the only people who are continuing this strategy or policy is the UK and Europe, you know, because that's where it emanates from. So that you can boost growth by, you know, drilling. You could, if you want, do fracking. I mean, you know, there are lots of other things that the UK government could do to engender growth, and it should. My personal view is that there's plenty of areas that you can save money if you're looking to balance the books, because we do have that mindset over here, than, you know, putting up capital gains tax to 24%, you know, and, you know, allowing the entrepreneurial class to leave the country. Because even if you have the mindset of, well, you know, who cares about a bunch of rich folks, you know, it's not just the richest folks, it's the people who are kind of in that kind of 1 to 10 million bracket, who run businesses, set up businesses, employ, hire people. If they're leaving, you know, then you lose the entrepreneurial spirit, and so then growth becomes more of a problem. So we need to fix that. Yeah.
Reza, thank you as always. That has been wonderful. We're about 15 minutes over. So yeah, thanks. That's been great. Any last predictions on bonds or?
Yeah. So I mean, just to sum up, look, I think you know, in my space, you know, corporate bonds, high yield bonds will continue to perform well, you know, over the next 12 to 18 months. I think there's some good value there. I think, you know, 1 to 5 year gilts, you know, particularly the low coupon ones, are really interesting for higher rate taxpayers. People should have increased their exposure to that. I think stock markets will continue to stay, you know, the S&P will continue to stay high for the foreseeable future, may continue to grind up, you know, not driven by anything of real fundamental value, just because money's been pumped into the system and there's no desire to change that status quo.
But if you can get 4 to 6% on a gilt, risk-free.
Well, I think there's a window of opportunity for people who are risk averse, you know, to do two things. One, to reallocate to lower risk securities like gilts and corporate bonds, or other asset classes. I think Bitcoin is particularly interesting where it is right now, if you believe that, you know, that is you know, I don't know, a safe haven like gold. I think it's worth dabbling a little bit in there. And I think it is worth thinking about if you're reallocating stocks to international stocks where there's a better rating or a better valuation multiple, you know. So that's my view anyway.
Wonderful. Reza, you've just been voted in Chancellor by Andrew McKelvey on the chat. Right. Good stuff. And yeah, Mark is backing that up as well. So thank you very much. We've got Dylan coming up with Angeline. From the comments, I pass my thanks on. Thanks for coming in.
Pleasure to be here. Thanks.
Cheers.
Thanks, Rich.
Hey, trader friends, welcome back. And we are joined by Dylan Rattigan, this time all the way from New York City. Dylan, how are you?
Good morning, good morning, good morning.
What is the deal with you and no coffee your side?
What's with you flaunting and taunting in a rude and disrespectful way your dear friend who happens to be waking up in Long Island, not in New York City.
Oh, Long Island.
I'm at the beach, and I'm in a coffeeless cottage.
How's that possible? How is that even possible? It's crazy. And Dylan, I only taunt people I'm fond of. So.
Oh, okay. So that's a sign of affection.
It is a sign of affection. That's right. Because
okay, I will take it as such.
You only tease people you're comfortable with, right? Right?
Okay.
Yeah.
Okay.
So, yeah,
okay.
we gotta...
I'll take it that way.
Speaking of fond of, a lot of people fond of hearing your view because you cut through the crap and you try and tell the truth as it is. What are we going to see in August? We have some trader friends saying it's going to be a quiet one, melt up going to continue, or are we going to see that correction that Rich has been talking about for the last, 6 months or so, and then it's a fill your boot situation? What do you think it's going to be?
I think it's more likely a Rich McDonald face blaster, call your mom and hide in a tree kind of situation coming up pretty quick here. But not for any good reason. I just think that you're going to get some political theater. You're going to get some Fed drama. You're going to get some thin markets, people on vacation, all the August things. Obviously, I have no idea what's actually going to happen. But were I to be an odds maker, which sometimes I am, I would lay the odds with my boy Rich and say, listen, if there's any risk in this thing, it's more risk of a little face blast than it is some sort of melt up. You're gonna get some tariff drama. You're gonna get some Fed drama. It's gonna be a lot of drama, mind you, but you're gonna have it.
But the after the drama is done, it's still an upward-looking picture in the movie.
Oh yeah, yeah. Oh yeah, sure.
Now, the other thing, too, is that, and I watched your thing on CNBC, fantastic stuff, and you were talking about, how investors should pay less attention to, Trump and all those tweets and everything and pay more attention to the fact that, all this tariff talk pretty much happened in April, and now it's just a constant drama, but not much is actually going to happen. It's going to get kicked down the road.
My view is that we will end up with moderate 5 to 10% reciprocal tariffs with pretty much everybody. There'll be some selected bigger, 15, 20% tariffs on some very specific things, maybe something around steel, maybe something around copper. But the sort of the catastrophism, if that's a word, the catastrophic thinking is misplaced, I guess I would say. That the tariff situation is actually more regulated, in my opinion, by the bond market. And what we saw in April was such a great example of the bond market's power. much more so than the president of the United States or any legislative body. Now, the thing that's sort of the most interesting thing that's happening, and this is my first time back in the States for a minute, so I'm sort of, I mean, I don't know if it matters really from where you're sitting, what air you're breathing, but the dollar's taking it in the can, if you know what I'm saying. I mean, it's just a mess. And so you sort of, if you're looking at where the markets have communicated the loudest and the clearest is in the compression and substantial compression on the economic value of the US dollar. And I guess the question is, from a trading perspective, as you know, I've been on this show, multiple times now over the last few months and said, you got to buy the dollar, you got to buy the dollar just on price extreme. And I've been wrong. It gets weaker. I still think you got to buy the dollar. It's hard for me to imagine that the dollar continue. I mean, listen, it was hard for me to imagine a minute ago, so that'll get you, nothing. But I do think that the dollar, I do think that the dollar is a good opportunity here. But don't, call the lawyers. Don't call me. You know what I'm saying?
And Tom Sosnoff is a big fan of the contrarian trade. Is the basis of buy the dollar at these levels? Is that a contrarian view? Because at some point the dollar is going to have to come back, and there is no other alternative to replace the dollar as the world's most liquid currency.
Reserve currency,
yeah, reserve
not just
currency.
liquid currency. Yeah, exactly. Call your mom. Okay, it's not just any currency. This thing's a reserve currency. It's in the weeds. So yeah, I mean, I think it's yes is the short answer to your question, but I would say that it's also too far too fast. It's one, the value of the reserve currency being in decline, even though I think that's a political intention, a preference of this administration, of this Republican administration. I think it wants a weaker dollar, but I also just think it's a matter of sort of a classic Tasty trade style, too far too fast, just in a price extreme. And so those two things compound. But you also are in a situation where, again, if you believe the Fed futures, which is certainly not an irrational thing to believe, that rate cuts are increasingly in the relatively near future, even if it's September. And so that's not nothing either in terms of being a headwind for the dollar, not a tailwind, actually. But.
Cool. And we're coming up to a really, really key week as well. Not just the big US banks that are going to kick off the earnings party, but we also have the likes of, Abbott, PepsiCo, Netflix as well coming to the earnings fray. What are you expecting in terms of, what the banks are going to say? Do you think they're going to say that actually, things are not as bad as they seem for the US economy, and actually, the big banks are still able to come up with good numbers relatively? Yeah,
I mean, I think my sense is that is what is most likely. The thing that I'm actually most interested in personally, to the degree to which they could get into this, is how much has actual budgeting, I'm talking about big budgets and capital expenditure and hiring, been affected by the increased uncertainty caused by the Trump administration's governing policies, specifically as it relates to tariffs. And so I do wonder, even though I think that the tariffs end up in that sort of moderate to minimal 5 to 10% or even 5 to 15% range, I do think that there's enough uncertainty in it that it can or could have caused pauses in budgeting and hiring because people don't know what's going to happen and what the cost. Volkswagen doesn't know what the cost of selling a car in the U.S. is, or go down that list. And so I'd be interested in any insight from the bank side that looks at that, any of the currency aspects as well. But I do think that the bank earnings ultimately turn out probably reasonably well. So, I mean, I do think that the prevailing, I think the U.S. economy is strong.
Yeah.
And I think that the bank earnings will show that.
And
just
what's
to be very clear.
interesting too is that, 3-4 months prior to this, we're all talking about, concerns about inflation, tariffs, when is that going to start filtering through? When are we going to start seeing cracks in the economy, in the US labor market? And that really hasn't, if we were to be very honest with ourselves, really hasn't started in a big way filtering through. In any case, I was really fascinated, Dylan, over the weekend to go through some of the numbers from LSEG saying that companies in the S&P 500 are looking at 5.7% gains year on year in terms of the second quarter earnings. And big tech still expected to make big gains.
Yeah. I mean, I've kind of, that's where the obvious place you have to go is AI, AI adjacent, which is a lot, pretty much everything at this point. And then transportation technology. And I think that the combination of the sort of the massive explosion in transportation tech that we're really just coming up on, the explosion of AI, which we're into, and the explosion of AI adjacent, which we're into, are all kind of here. The issue I don't actually think has anything to do with economic strength. The issue is going to continue to be economic wealth concentration, because you're seeing you continue to see the divergence where those who benefit from the technology, or those who benefit from equity or equities related to the technology, are not. There's a increasingly large group of have-nots, and increasingly small group of haves who are related or directly invested in the boom piece. So I think the question is not even so much of boom or no boom, so much as it is a question of the degree to which the boom broadens in a way that's beneficial to most people in society, or narrows in a way that is beneficial to only a few people in society, which at this point is actually more of a political question than it is an economic question, although there's a point where it gets to an extreme where it also does become an economic question. But I don't think that the economic strength itself is the issue right now.
So based on all this, we've been playing a game on Trade Live with IG with our trader friends, and we're going to ask you as well. So if you had a 25-year duration from now, what kind of percentage would you put money into? For example, bonds, equities, commodities, FX, or what would the Dylan Rattigan mix look like?
You want the mix?
Now I want the mix, the recipe, the Dylan Rattigan recipe.
I mean, but how refined are you allowed to be in this game?
So, for example, I said, the Ange recipe had 10% gold, 10%. So I'm building a 10% crypto exposure, and 50%.
But can I be 10%
US
Tesla?
Stocks. Yeah, you can. You can have a cash holding. That's fine as well. Rich, I think he said he had 30% bonds, which I thought was quite high. But I had 50% US stocks, 10% other stocks. So, yeah, what
other
is the...
stocks being nice. No, so anyway, listen, I'm big. I think transportation tech is the thing, as you know. So I'm going to be 10% Tesla, because I think I believe that Tesla in the next 25 years. I think Tesla's much bigger than Musk. I believe it's a magnet for. Anyway, you don't want to hear my story. That's what I think. I'll be 10% Tesla. I'll be 10% crypto, even though I hate it.
Okay, so you got 80% left.
That's right. Listen, I might come back and bump my numbers.
Okay.
I'll go 30% S&P, 30% bond, which 30%
is 30% S&P, just the index itself, or
index? Yeah, at 30% S&P index, 30% bond. What does that get me to 80?
Yeah. So you got 20% left. You can do property too if you want.
I hate property. Oh.
So that's rich.
Then I go 10% Mexico.
10% Mexico. Interesting.
I believe they are a country of the future. I believe they are a country of the future. And then I'll go 10% oil, 5% oil, 5% coal, because I believe fossil fuels in their final chapter become extremely expensive.
Interesting. Interesting.
So 5% oil, 5% coal, 10% Mexico, 10% crypto, 10% Tesla, and then 30-30 bonds and stuff.
We had to get you on sometime, a separate occasion, talk more about Mexico. I've only been to a place that everyone says is not Mexico. So I've only been to Tijuana. But I would love to understand your reason for 10% Mexico.
Demographics.
Yeah.
Demographics, adjacency to the American economy. But yeah, demographics and adjacency and geography.
Right, we are going to have to...
Because Europe, everybody in Europe and Asia is about to be dead on demographics, with all due respect.
We're not producing enough big families, you see.
There's no more babies.
Yeah.
But North America, we've got the babies. We got the babies. We got the, we got a couple of oceans. We got a Pacific. We got ourselves an Atlantic. Anyway.
On that note, we're going to have to wrap it here, Dylan, but always a pleasure, and we'll check in with you soon. Any questions, do slam it here. Don't forget to hit the like and subscribe button. Any questions for Dylan Rattigan, send it to me on ask@ig.com. Right, we're going to have to love you and leave you. Send us a picture from Long Beach, Dylan.
See you soon.